What is up, crypto peeps? Hope you guys are staying safe through this sea of red that we are currently experiencing in the crypto market. You'll see comments from people on my videos and other people's videos as well, and news articles that I'm reading saying that, oh, how can you say we're in a crash? And then there's the opposing side that says, of course we're in a crash. We've lost over 50% of the market cap in 30 days. In any other market, that would be considered a crash. So yeah, we are definitely in a crash, and that's not to spread FUD or to stir things up. We have to get away from this, this attitude that anytime somebody is speaking honestly about the market, we deem it as FUD. Yes, there's FUD out there. Of course, there are, I think, some contrived or concerted efforts to ridicule the crypto market. But when somebody is within the crypto market and you know that they have our collective best interests in mind, you can't say that they're spreading FUD by reporting something accurately. So what I wanted to discuss today is the top 3 warning signs that I see for Bitcoin. And this is, again, not to spread FUD or, cause some sort of controversy or stir things up. It's simply to protect you and to protect me and to protect our investments. That's it. I'm not saying Bitcoin is not going back up. I'm not saying we'll see a retracement back up to the 20K levels eventually by the end of the year. I'm not saying any of that. I'm not making an indictment on Bitcoin's future. I'm only stating this to protect the bleeding portfolios at the moment and to alert you to 3 signs that you might not be seeing or might not be aware of. So the first one that I wanted to go over is the moving averages. So if we take a look at, actually I'm going to use TradingView, but if we take a look at TradingView, I drew this up earlier. Some of you that are on the Discord have already seen this. If you're not on the Discord, join the Discord. It's a free service that's available to anybody who clicks the link. But yeah, I discussed this earlier that I noticed a disturbing trend with regards to the moving averages. Here's the 14-day moving average in this navy blue line. The 100-day moving average is this magenta line. And you could see right here, if we zoom in a little bit, that they're actually converging, and the 14-day is moving below the 100-day. You could see that right here. And we haven't seen this in Bitcoin's charts except for 3 or 4 times in history. The last time it happened, if we go back to, I think it was somewhere around 2015. The last time it significantly happened was around 2015. I mean, the lines have touched before, but in terms of converging and crossing over, that hasn't happened except for a few times. So you see that it happened here. This was what? This was the actual bear market of Bitcoin, right? So 2014 all the way to, how long did this last? To June of 2015, and then there was a short consolidation period and a small rally here before August 2015 it happened again, and this lasted another from August until October. So that is definitely an alarming sign, considering that we've only seen that happen a few times, and now it's currently starting to converge. And you see Bitcoin's current price is at 8,626. So it continues to drop. We'll continue to follow this as it moves along. Obviously, the markets and the charts don't always play out in the way that you see or the way that you want them to, but we have these things as guides in order to help us make imminent decisions about our portfolios. And that's why, if I've been talking to some of you again on the Discord, I was saying that I'm going to be selling Bitcoin at a certain level and buying back at a certain level. Could you buy back now? Yes, you certainly could. Just know that based on some of these indicators that we were talking about here, and some indicators that other people who are knowledgeable in the crypto space are talking about, we could see more of a decline in Bitcoin's price. So just as long as you're aware of that, what I do is dollar cost or cost average my purchases. So I stagger them. So instead of, if I have $1,000 to spend right now on Bitcoin, I'm not going to dump it all at 8,600. I might buy 20% at 8,600, wait to see if the 14 and 100 day converge even more and the price dip even more, and maybe buy another 20% at a lower price point, so that you're averaging out your costs. Nobody can tell you, oh yeah, Bitcoin's going to be this exact price at this exact time, and that's why you cost average your purchases and also stagger your sales as well, so you're not selling everything at a certain price point when you're taking profits, obviously. The other moving average that I wanted to look at that is also pretty unprecedented in Bitcoin is the 200 day. So let me pull that up right here. I'm going to change the color of this real quick. So this blue one, which is about to be yellow, is the 200 day. And you could see here, let me zoom in a little bit. So this yellow line right here, this is the 200 day moving average. You could see for this day that Bitcoin looks like it's going to be closing below the 200 day moving average. And that hasn't happened since, I mean, you have to go as far back again. It's probably around that 2014, 2015 era. That hasn't happened since, what is this? This is October. Sorry, I apologize. Yeah, this was October. Yeah, so it was right around this time frame that we were talking about. So you had the long bear market here, starting way back in 2014. So it began in like around August 2014, and this lasted for, it seemed like forever, almost a year and a half. A year and a half, and then you saw it fall back under that 200 after this brief rally that we just talked about with the 14 and the 100 day. You saw it fall back under that 200 line, which is again this yellow line, and that lasted for another 4 or 5 months. And since October 2015, we have not seen Bitcoin go under that 200-day moving average, and we are now there. So that is another moving average warning sign. If we close below this, expect Bitcoin's price to decline even further. And if we do a fib retracement here from the current swing low to the peak that we were at just a few weeks ago, it seems like forever ago. It's crazy to think that, you know, this was not even what, a month ago. A little over a month ago. It's crazy to think that we were at almost 20,000 here. But if we use these fib levels as targets, I think if we cross below this 200-day moving average and we close significantly below it, you can target a close to $5,000 price point for Bitcoin. And I hate to say it, but you know, again, this isn't spreading FUD. This is just so that we can make calculated decisions on our portfolios. What I would do in that case, I would buy up a shit ton of Bitcoin if it did hit 5,000. You better believe that. I mean, I always buy the dips. I believe in buying the dips all the time if you have the liquidity. All right, the next warning sign that I want to direct your attention to is what's going on with Bitfenix. And no, this isn't specifically with regards to Tether and you know, taking Tether as a cryptocurrency and saying that Tether on its own is going to blow up the market. I hear you guys' arguments. I'm on the same boat. You know, Tether is a small cryptocurrency when viewed in context of the larger market cap. It has a $2 or $3 billion market cap. What is Tether at right now? Yeah, so Tether is at a $2.2 billion market cap currently. So while I'm not as optimistic as some of you in saying that, you know, a $2 billion market cap coin is not going to bring down the entire market, because the crypto market once again continues to prove to be dubious, right? It's tenuous. It's something that's still standing on shaky pillars. It seems like anything can bring the crypto market down. Bitcoin alone can bring the Bitcoin market down. You know, crappy news coming out of Asia can bring the crypto market down. It's so saying that something like Tether can't bring the crypto market down, at least, you know, temporarily. Of course it can, but that's not what I'm arguing here. My main warning sign is based on Bitfenix. If you go to Bitcoin on trading view and you look at if you click on markets, it will show you all the markets where Bitcoin is traded. If you go to volume and sort that by the highest volume, look at what the first exchange comes out to, Bitfenix, right? Bitfenix is currently seeing the most activity on Bitcoin, and yesterday it was at number 2. So it is definitely a top 2 exchange with regards to Bitcoin. So if Bitfenix is included in what's going on with the Tether controversy, with regards to the subpoenas, with regards to the judgments, if somehow Bitfenix is indicted in any way, shape, or form in this, you could be seeing another Mt. Gox-like scenario, right? Maybe Bitfenix will be slapped on the wrist and will be given some sort of fine or penalty or warning. But you could also see Bitfenix somehow fold, depending on the judgments that are levied against it. Now, best case, what's going to come out of this is still a pretty bad situation. I think what the attention on Bitfenix will do is ramp up regulation on the crypto markets, right? On the crypto exchanges, sorry. So something like this can be the beginning of the path towards extreme regulation by the government. And while in the long run that might be good because it might, filter out all the shit coins and scam ICOs that are just using the fact that we don't have a lot of regulation as a way to make as much money as possible and run off with the money. While it may be good in the long run, in the short run, we're going to feel those pains in the market for sure. So keep an eye out for that. This isn't necessarily related to Tether. This is more related to Bitfenix and the fact that most Bitcoin currently is exchanged on Bitfenix. And you see the volume, it's by a long shot, right? Like Coinbase is considered a huge exchange and it's doing what, 49 right now? And the volume at Bitfenix is 2.25 times that? 2.25. So yeah, continue to monitor that story and continue to watch out for that. All right, and the last warning sign that I wanted to take a look at with regards to Bitcoin and cryptocurrency in general is the market cap. So both the market cap, the total market capitalization, as well as the percentage of total market capitalization or the dominance that Bitcoin has over the overall market. So the two warning signs within the market cap are this head and shoulders formation right here. This is if you look at the entire market cap, so if you go all, there has never really been a head and shoulders pattern in crypto. And that's why this is such a young market. It's such a young space. I mean, there's some patterns that we've never seen. These patterns are undeveloped. And it's crazy to think that, even for those of us who've been in crypto for a long time, or at least have been in Bitcoin for a long time, to never have seen this before, it just speaks to how young the market is. I mean, if you look at something like the NASDAQ or the S&P 500, I'm sure you've seen every single pattern available or known to man if you look at the charts. But this is really the first time we see something like, an actual complex pattern forming, like a head and shoulders pattern. And if you are familiar with trading patterns, head and shoulders patterns are usually bearish indicators. And once again, I'm going to plug the Discord here. We do have for free the Trading Trends 101, and it goes over some of the key patterns that you will see on the charts when you're doing your technical analysis. And head and shoulders is one of the ones on here, and you could see here, this is what a head and shoulders pattern looks like. And right after the head and shoulders, you usually see a downtrend. And that's what we're seeing here. We're currently in this downtrend right here. And here's the left shoulder, head, right shoulder, and here's the neckline. So we're currently below the neckline in the downtrend. How far the downtrend will go, it's anybody's guess. But, along with the other indicators that we talked about, the moving averages, as well as some of the potential news that's coming out, we could still have a way to go in terms of how low the dip can last. And then if we look at the percentage of total market capitalization, or the dominance of that Bitcoin has over the overall market, you could see here in the early days, obviously most of the crypto market was comprised of Bitcoin, and largely so. I mean, we're in the high 90s, high 80s in terms of percentage points. And then, you know, if you look at the recent times, this is the least dominant that Bitcoin has become. And while I think that's good in the long term, just like I think that some regulation will be good in the long term, while I think that this is good in the long term, meaning we'll finally have a market, a crypto market that isn't so dependent on Bitcoin, where coins can fluctuate in isolation without really affecting the entire market, right? So the lower this is, I think in the long run, the better. But in the short run, while we're in a dip, this could be another indicator that Bitcoin is yet going to decline. So again, this is just so that you guys can stay safe, your portfolios can stay safe, my portfolio can stay safe. I will be buying the dips at different levels. I do think that if we close below that 200-day moving average that we talked about earlier, this one right here, we will see a path towards close to a $5,000 Bitcoin if we do close significantly below this, especially if we have multiple candles below this 200-day moving average. If somehow this rallies back up today, because this is today's candle, so by the time of close, if somehow this rallies back up, which also could happen, I'm not saying it can't, but if it bounces from that, that's a good sign. I mean, we've bounced off of these long-term averages before, but if we close below this and you see a few more candles close below this, we could be heading for a further significant downtrend. So, you know, keep your eyes on these indicators, keep your eyes on these warning signs that I'm pointing out for you today. Tread very lightly with regards to the moves that you make in the market. I wouldn't make any significant moves. The only thing I'm looking to do right now, if you saw my video from yesterday, I offloaded a lot of my altcoins at a 10% loss. The only significant moves I'm doing right now is buying the dips. I will significantly increase my position in Bitcoin if it does, you know, reach down to a $5,000 level, and along the way as well by cost averaging my purchases and staggering them. And then I'm really bullish on Ethereum. I'm not going to talk about that today. You can see my video from yesterday as to why I'm super bullish on Ethereum. But yeah, so stay safe out there. So leave a comment, thumbs up. Leave your crypto addresses in the comments. Most importantly, subscribe to the channel. Join the Discord, it's 100% free. Sign up to the Patreon for custom trade alerts. Stay safe out there. Peace.